So they've got a stimulus going right now, dealing with liquidity issues. What do you see here?
So all of this started. Actually, it's been going on for months, and the issue in China has been their economy has been faltering. It's something we've talked about a lot in relation to some of our portfolio companies. There have been all kinds of concerns about the Chinese economy, and they've actually been facing deflation, which, unlike the disinflation we've had here in the United States, means their prices for a lot of items have actually been declining. Imagine seeing lower prices. But because their economy is slowing badly, about a week ago, their government took a long series of actions to improve liquidity there. They have put, more money into the system. They've lowered reserve levels for the banks, freeing up capital for additional loans. They've lowered mortgage rates. And on top of all of that, they have actually made large amounts of funds available for people to buy Chinese stocks. They are trying to prop up their stock market. The other key thing that they're doing, they also lowered mortgage rates. And this marks a huge change in China's policy. It wasn't so long ago that the Chinese government was telling their citizens housing is not for speculation, it is to live in. And the reason they were doing that is because Chinese people tend to store their wealth in real estate, just like many US citizens. We tend to store our wealth in the stock market. Although lots of people here are involved in housing as well. It's not a bad way to save and invest and have some sort of hard assets. But in China, it's so closely tied to wealth that people have started to buy, 2 and 3 homes. It's the way they save money, and that has created. They've had a weird situation where they've had an excess of supply, but a shortage of finished properties. Prices have gone through the roof. So a lot of what they're doing is actually designed to lower the cost of housing and make it possible for more people to buy houses. This is really the opposite of what the Chinese government had been trying to do previously.
So I know that you have invested in this region of the world before through DKI. How's this affecting you?
Well, one of the things that we've been talking about a lot on the five things this year has been Las Vegas Sands. They are one of the world's largest gaming companies, and they have the leading market share in Macau, which is the biggest gaming capital of the world. And despite fantastic performance from the Marina Bay Sands in Singapore, Las Vegas Sands stock has been weak throughout most of this year. And, a large reason for that has been concerns about the Chinese economy. With all of this additional liquidity and some of it designed to prop up Chinese equity prices, Chinese property prices to make people there feel more wealthy. There is a lot of speculation in the market that that money is going to find its way into Macau. And that's why in the past week or two, we've actually seen Las Vegas Sands stock price go from the very low 40s up into the, 51, 52 range. So that's, a 20-25% increase in the value of the stock in just the last week or so. So, this is something we're glad to see.
Excellent. So shall we move on to the second point?
Let's go.
Choke point 2.0, banking Bitcoin financial freedom.